Good morning, friends. Welcome to Weekly View on Markets. Markets staged a recovery during this week from lower levels. I had suggested to buy on dips, and once again, this strategy has proved to be correct. The rally was triggered by dovish commentary from US Fed Chairman Mr. Powell. There was US Fed meeting during the week in which interest rates were not raised, and accordingly, there was fall in the bond yields of US markets, which has triggered the rally in all global markets. Accordingly, we have seen the rally in Indian markets also. But still, markets look weak on charts. So next week, movement in the markets will decide the trend of the market technically. These dips are providing an excellent opportunity for investors to pick good quality stocks as Indian macroeconomic fundamentals are quite strong. Let us look at performance of indices during this week. Nifty has closed at 19,430. It has gone up by 183 points, up by 0.96%. Bank Nifty closed at 43,318, up by 536 points, gained about 1.25%. Mid cap index closed at 39,587, up by 886 points, that is up by 2.29%. Small cap index also gained 325 points, that is 2.58% for the week, closed at 12,965. India VIX is stable at 10.88. So it is really surprising for me. For past several months, market is trading with a low volatility. So on one side, we are seeing a lot of geopolitical development like escalation in Russia-Ukraine war and is Israel Hamas conflict. But Indian markets are not ready to fall due to these global developments, and we are seeing the volatility also remaining low in the Indian markets. This is a very interesting development which I have seen for past several years. Now let us look at performances of different sectors. Almost all sectors closed in the green during this week. Realty sector gained it gained almost 10%. This is a highly volatile sector. It gains 10% sometimes, it falls also 10% sometimes. But most of the good realty companies like DLF and Godrej Properties all posted very good result. So that is why we see the rally in realty sector. Media sector gained about 3.96%. PSU stocks gained about 3.10%. Oil and gas, PSU banks, energy sector, infrastructure, commodities all gained more than 2%. Consumer durables gained around 1.98%. NBFCs gained about 1.2%. FMCG sector gained about 1%. Auto sector was the only sector which saw some profit booking, lost about 0.77%. Otherwise, we have seen good rally in all other sectors during this week. This is the daily chart of Nifty. Last week, I had drawn this neckline of head and shoulder pattern, which was found, and still we are below the neckline. Till the chart crosses the neckline, technically market is in a bearish kind of short-term bearish kind of trend. So we have to wait and watch. Next week moment will decide the trend in the market. This is the chart of mid cap index. Here also we can see as long as it is trading below this long-term trend line, the bearish sentiment is there technically. It has to close above 41,000 level. Then the chart will come above the trend line. That will give a bullish indication for Nifty Mid Cap Index. This is the chart of Nifty Small Cap Index. In Small Cap Index also, the recovery has been faster comparing to Mid Cap Index, but it has to cross the crucial resistance level of 12,965. That is the line which I have drawn. So if small cap index crosses this level in next week, we'll see further bullish movement in the Nifty small cap index. But comparatively, small cap index has been more resilient and we have seen quick buying from lower levels. This particular candle, which has got a long lower shadow, indicates that there is enough buying interest at lower levels in the small cap stocks. This is a chart of Bank Nifty index. In Bank Nifty index also, chart has to cross 44,000 levels. Then I will say there is bullish sentiment in the market. We'll have to wait and watch. But surprisingly, many of the PSU banks and all the banks and NBFCs who have declared results have given a very good results. Their profits have gone up. NPS have come down. So there is good credit growth and their net interest margins are going up. So banking and financial sector is doing very well. So I expect Bank Nifty to go above 44,000 and we'll see good momentum in the Bank Nifty index and financial sector. So any dip in financial sector is a good buying opportunity of good financial stocks. Now let us look at some of the macroeconomic fundamentals. Lot of macroeconomic data is coming out in the first week of month. So auto sales for month of October have generally gone up by around 16%. Except except tractor sales, all other segments have shown growth, and also the exports were weak because of the weak global demand. Otherwise, auto sector is doing very well. This gives me a confidence that our GDP growth will be higher for the year. GST collections has come more than 1.7 lakh crore for the first time. It is at 1.73 lakh crores. So this also indicates that there is good industrial and commercial activity in the economy, and this is also indicated by PMI manufacturing index, which has come at 57.5 versus 58.6 in the previous month. It is slightly lower than the previous month, but still 57.5 PMI index number is a very good number. There is quite good expansion in the industrial activity. Similarly, in the service sector, the services PMI index has come at 60.1 comparing to 61 in the previous month. But 60.1 is also a very good PMI services figure, which shows expansion in the services sector. Both the industrial sector as well as service sector is doing very well. This is reflected by higher GST collections. So, the economy is doing very well. This gives us the uh, confidence. RBI dollar reserve is at 586.11 billions for the week. It is up by around $3 billion during this week. Rupee, after hitting 83.4, it has strengthened, closed at 83.21. The bond yields have dropped. That has helped the rupee to gain from 83.4 to 83.21. Dollar index also, after hitting 106, it has come down to 105. So that is why we are seeing appreciation in the rupee dollar rate. Gold price after hitting around 63,000, it has come down to 61,025 for 10 gram 24 carat. Crude price after going beyond $93 per barrel has come down to 85.23 barrel dollars per barrel. That is good for the Indian economy. We will see the pressure on inflation coming down. FIIs continue to sell. They have sold 5,521 crore during this week. DIIs are buying continuously. They have bought 3,540 crore during this week in equity. So, good news is that there was no rate hike in the US. Correspondingly, US bond yields have softened. There may not be further rate hikes as per Fed commentary. So that is why markets are very happy with Fed meeting outcome. After that, we have seen the rally in all global markets. Bank of England also had the meeting during this week. They have not raised the interest rates. DIs are using dips in the markets to buy. That is why we are seeing market recovery from lower levels. Quarterly results declared so far are quite good. Realty sector earnings have picked up. We have seen a sharp rally of more than 10% realty sector during this week. But technically, markets look weak on the charts as we have seen. This may be a relief rally or uh, the next week move has to set the trend for the markets. Geopolitical developments like again there is escalation between Russia and Ukraine and Israel and Hamas. These war kind of situations are a overhang on the markets. But Indian macroeconomic fundamentals are good. GDP growth is going to be good this year. So DIP should be used by the investors to invest into mutual funds, buy good quality stocks, and also investors should continue their SIP investments, which will give very good returns in next 2 to 3 years time. My experience is that Indian markets have always gone higher after every crisis. So investors should stay invested and should not get worried about this volatility due to global developments. We should look at the growth in Indian GDP and the macroeconomic indicators of Indian economy. They continue to be good. We have nothing to worry for the time being. Of course, economies are linked on a global scale. So developments in global economy will definitely affect our exports and other sectors. But internally, India is a large market, and as long as our industrial activity, services activity, and auto sales and all these figures are coming good, we have nothing much to worry, and investors should have patience and be remain invested to get good returns in coming months and years. This is all for this week. If you like my video, please subscribe to my channel. You can ask your questions, you can give your comments, you can refer to your friends. We'll meet next week again. Thank you.